Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So it's been an interesting week. Starting last Friday, I think on the close, a lot of people were staring at the potential head and shoulders top formation in the SPX, thinking about all the loss of leadership that we've had, all the holes in the charts based on mediocre to poor earnings and a lot of the tech leaders, lots of stocks, lots of sectors trading below the 8 and 21-day moving average. So you would have thought that perhaps the down move would have been more fluid, there would have been more momentum, and we've really had a very choppy week with a lot of misdirection, with a lot of false signals. So if you didn't participate or you didn't have the outcome that you thought you would have based on your thoughts from last Friday to this Thursday, I think a lot of people are a bit frustrated. But all in all, there have been things to do, and you just have to lower your perspective, or just try and be a little bit more tactical and maybe even trade less, less positions and get back to more like a 1.5 day trades, because there have been a few of those working, and it's again, we're done with earnings and we're entering the summer, and markets near all-time highs. We corrected a little bit, but not a lot. We now have a hawkish Fed. Everyone knows what happened the first time we increased rates. We had a crazy decline in January. Okay, people are a little worried that might happen now, or want that to happen now, and it's not. So lots of little things going on. So I would just simplify it. You look at the chart of the SPX, and you'll see, here was, here is just say that little pattern that everyone was talking about, how we could have had a really awesome short, but it's not developing the way you would have thought, with the fear and the speed, et cetera, et cetera. Lots of false moves. Here was looked like all of a sudden this was going to break to the upside, got negated. Then you thought this was going to bring downside, and then you had the Buffett news and that, and then you had finally it looked like we're ready to go, and then yesterday was like a doji, and then today you had the move that people wanted yesterday, and then we just held the 200-day for now. So not very fluid. So hopefully, you made a lot of money or a decent amount of money after the double bottom, after the commitment, and then during this trend, which was a lot easier. And it's been, there's been some stuff to do, since breaking the ascending channel. But anyway, let's talk about most recent. So yesterday, the Fed came out hawkish. Commodities sold off. Oil, gold, a lot of guys got short yesterday based on that playbook and long some banks. And today, this morning, you had your follow through to the downside in gold, the gold miners, and oil, the oil sector. And if you took the trade off, which has been the prudent thing to do, things rallied back and didn't really fall apart, but you had your trade. Take your trades. Don't add on weakness and don't chase strength, and I think you'll be okay for now. If you go just say to the USO closed down, on what's it called yesterday, and basically held the 8-day moving average. So take everything out of the equation, whole and all, it held the 8-day, which is exactly what we said some support would come in. So if you shorted it when it traded above yesterday's highs and came back below, you had a nice overnight trade. Now you'll figure out what's next. If you used some of those reverse ETFs, they paid you even more. DWTI. A lot of guys, including Sperling and some of you guys in the chat, went long it yesterday. Okay, and where did this go up to? It touched the 8-day moving average, which has been below, and that was it. It was up $3 this morning. So from this little reversal point to up 3 or 4, you sell into some strength, and then if it goes back below the prior high, you get out of the way. GLDs, some guys went home short that. Okay, GLDs basically, if you look at it like this is for gold. It broke this ascending, or not even this pennant yesterday, and then gave you a move back to prior support. So here, that's it for now. Okay, if you pressed into this thinking we're going to fall apart, you lost your money. If you got short yesterday and the GLDs were down $1, you did okay. Okay, last time it broke to the upside. Broke, gave you follow through. Broke down, gave you follow through. These are ways to make some money. If you did the miners, look at this nugget move. Two-way trade. I know I was here listening to Chait, in the chat. I have to give him some props because he's trading both ways and he's putting it on. You could have shorted it here when it broke the 8 and 21 day. Then, oh, look at the quinky dink. If you watched the morning call, where did we say some support would come in? Right at the 50-day, right around 78. You could have covered here, and some guys even went long there, and then you had a little push when it went above yesterday's low, and went another $5. So you can't complain if you're going to be short here, but the ends of these ranges, just the middle area is a little noisy, and now we'll see what happens if it gets up to this spot before you have to worry about it. So, the commodities, the oil reversed today, which I thought was pretty impressive. You had your trade in gold. Now it's going to be probably noisy. As far as, other things, stocks don't look so great. Amazon, the two strongest stocks out there, we talked about can they go green today. They had a little bit of a hard time. All in all, it's not broken, but it doesn't seem like there's any, it's not broken at all, but it's lost a little momentum, but still hanging in there. 30-point pull-ins, trying to hold the 8-day. Could go down to even the 21-day and still be fine. Facebook actually held the 21-day today. It was a decent move, not a great move off the lows after it showed you a little relative strength. And here it is now, still holding this prior area. Held the 21-day. We'll see if maybe it gets a little bounce tomorrow. That would be nice. It had a fail breakout here, so now if it's going to be any good, it should hold around there. Apple's been acting a little bit better since the Warren Buffett news. Been talking about kind of hold higher. Well, still here you had this overthrow below 92, and now it seems like it's trying to hold the 8-day and keep this tactical trend off the lows. And who knows, maybe tomorrow or the day after, if the market goes up a little bit, there's a little bit of a tactical trade here, to the 21-day. Again, tactical. That's the key word. Tactical, tactical, tactical. If you go below a pivot and you could get through there for a short, like today, the spiders gave you a decent short. Where if you were short overnight, okay, then you had a little bit of follow through. Not a hell of a lot, right? Traded below 203.63, went as low as 202.78, almost 90 cents. Then, it came. If you used your 5 and 3 minute chart, you saw it made a low. You could have been a buyer back above 203.63. Now it closed at 204.20ish. So 60 cents above that. So 70 cents below, 60 cents above. Here's your pivot. Pick a direction. Now we'll see if if things try to rally a little bit. And here's where resistance would be. And I think max pain everyone was talking about is closer to 205ish. So maybe there's a little bit of a bounce there. Oscillators like minus 45. So all in all, there's not a hell of a lot of momentum, but there's things to do based on these pivots and based on patterns. If you would have said, if you tried to be short all week for this move down to the 202.50 area, it wasn't the easiest thing to do the way these things move around intraday. You know what? Actually, some people were asking me to go over Under Armour. It's a broken name, but I am long a little bit on the VTF. Figured day one up, maybe, actually it's probably not the greatest idea considering it every time it rallies into the 8-day it fails. But if you sold it here, when it broke this upper flag, today was your first day with some relative strength. I'm not in Nike, but some guys did the same thing with Nike, first engulfing day. But these things are broken. It's hard to be in these broken names because when they fail, they just fail. If you try to do Netflix a few times or Google a few times, if you overstay your welcome, it comes right in. But anyway, there was one day up with those. FCX also, came in, went green today. Some guys made money in the hole, and I don't know if there's going to be much after this, but we'll see what happens. It's Thursday. There's not a heck of a lot going on, and now earnings season's behind us. We have the June Fed in 2 weeks into June, so there's a lot of time between now and June. There's going to be a lot of jawboning by all the different officials on, live meetings and this and that. What I would do every day is just get prepared, have your list of stocks, see what's acting, what's oversold, what's getting into resistance, where the pivots are, and judge it intraday and take some trades and look to, just hit some singles. Don't be looking for the home run trade right now, because if you don't book, you're short, or you don't get out of your long when things already have their move, there's not a lot of second and third moves thereafter. You have to either be very tactical, or you better be massaging a position with a lot of risk, because you're waiting for things to confirm your thesis versus, getting involved there thinking something has to happen. So with all that said, hopefully you're all right. It's Thursday. Get some drinks. It's been, a long week. We're getting closer to summer. Hopefully the weather gets a little nicer in the Northeast, because lately it feels like Seattle. Not that there's anything wrong with Seattle, but it's springtime. It shouldn't be raining every day. That was April. Now we're in May. But the sun will come out. Have a good night.